And so what did we have to do? We hired a consulting company to do it.
Mhm.
And our main criteria in selecting this firm to build this tool, I think is really interesting when you look at it historically, because it wasn't about how technically sophisticated they were. It was only because they were an approved vendor. It was just because the vendor approval
Yeah.
process was so onerous that it would have taken us a year to get someone else through vendor diligence. And so, even though this firm was really not well suited to build this thing, it was kind of the only option we had.
Hey, and welcome to this episode of Build versus Buy, a 30-minute conversation with product and engineering leaders about situations during their career where they've had to decide whether to build or buy. If you'd like to be a guest, reach out to me at Mang-Git@useanvil.com. That's Manggit@useanvil.com. If you enjoyed this podcast, please like and subscribe on YouTube or leave us a rating/review on Apple Podcasts or Spotify. Enjoy this episode.
Hello and welcome to another episode of the Build vs. Buy podcast. I'm your host, Mang-Git Ng, co-founder and CEO of Anvil, the fastest way to build software for documents. And today on the show, I have David Snitkof. He is the SVP of Growth at Ocrolus, which, as many of you may know, is very similar, working in the same space as Anvil in the document automation space. Thanks for being on the show today.
Thank you. Thanks for having me.
Awesome. Well, maybe to get started, as always, we like to get a little bit of background on what you do, on your current company, on your past companies, and just your career journey. So I would love for you to start there.
As you said, I'm David Snitkof. I work at Ocrolus. Ocrolus is an AI focused document automation platform, really being a data and analytics platform for lenders. And we help lenders of all kinds, small business lenders, mortgage lenders, consumer lenders, automate their lending processes by giving them trusted data in a highly efficient way. And ultimately, that helps them
Mhm.
make better decisions, which over time increases access to capital, which I believe and we all believe is incredibly important to the proper functioning and growth in our society.
Mhm.
So I've been with Ocrolus for about 4.5 years, and I've been in FinTech, product development, technology, lending for a long time. I've always been a data person. I've always been a builder. I've been a programmer in one way or another since I was around 8 years old. I love tinkering with stuff both at work and away from work. And I've done a variety of things. I worked at a few really large companies. I did consumer lending at American Express. So both before, during, and after the Great Recession, I was in consumer risk management, working on new cards and underwriting policy, and a very cool,
Mm.
multifaceted job to have at that time. Great combination of quantitative and qualitative work. Worked at Citigroup doing small business lending. So I ran small business risk analytics in the Citi retail bank end to end. And then always knew that I wanted to start a company and started a company called Orchard Platform in 2013, which was an analytics and trading platform in what was then called peer-to-peer lending. And so we were basically in the middle of the space, and we
Yep.
had lenders on one side, the funders, the investment firms who funded those lenders on the other side, and we did a lot of the analytical work and trading, reporting work in the middle. We sold that company to Cabbage in 2018. I ran analytics and data strategy at Cabbage for 2 years, and then I came on to Ocrolus in early 2020 to build Ocrolus's analytics business,
Mhm.
mostly focused on small business lending, and have run multiple functions in the company since then.
Got it. It sounds like your background in, I guess, like pretty much consumer fintech and lending probably lends well to your current job, pun intended, I guess, right? And I actually did want to quickly touch base on your Orchard platform experience because you mentioned something that I was not expecting, which is that you were in between the lenders and the funders. So, like the money, the people who had the money and the people who were lending the money of those people. Is that where you were sitting? Is that correct?
Yeah, so if you think about where that market was in 2013, 14, 15, peer-to-peer lending was just becoming institutional. And so
Mhm.
peer-to-peer lending was this really interesting concept, which was if you were a consumer, you could go get a loan, not necessarily from a bank, but you could go online. Literally, Facebook started, Lending Club started as a Facebook app back
Yeah.
when there were Facebook apps. So that was very interesting. And when someone would apply to one of these peer-to-peer lending platforms, the loans would go in their own auction marketplaces.
Mhm.
And then investors would come and decide which loans they wanted to fund based on the characteristics of the borrowers. And so what we at Orchard did was we figured, all right, if that space was going to grow, one, it would need institutional capital. And two, if it would need institutional capital, that capital would require good trading systems, good risk management, good analytics, good reporting, good risk modeling, all that kind of stuff. And so
Mhm.
that's really the platform we built. We had a trading platform that would allow institutional investors, so funds, family offices, banks, insurance companies, and a lot of companies like that were buying these loans at the time, to host their risk models on our platform
Hmm.
with essentially a high frequency trading engine to buy the loans that they wanted before others could buy those loans. And then we had an analytics platform to help them manage the portfolios, analyze their returns, analyze their risks, help their models get better and better over time. And ultimately, we sold that to Cabbage. The peer to peer lending did not develop the way that we thought it would develop. So we had a thesis that peer-to-peer lending would eventually, that model, which eventually became marketplace lending or called marketplace lending, would sort of take over the world, that a lot of
Mhm.
lending companies would end up exposing an API, being programmatic, and facilitating a connection at the loan level between the borrower and the investor. What ended up happening in most of that sector is it really caught the eye of traditional specialty finance.
Mhm.
And because of that, a lot of the lenders started getting typical credit facilities, doing typical securitizations, and it became a bigger market because of that, but it also became a much more traditional market and not one that lended itself to real-time trading.
Got it. The peer-to-peer aspect of it started going away, or like being less of a part of it than you thought it would
Oh
be.
yeah, and a lot of these companies ended up a couple years later discontinuing their retail platforms
Mhm.
because it was just much easier for them to get a few institutional capital partners versus managing thousands of retail investors. So
Yeah.
the Orchard journey was very interesting because we built really critical infrastructure in that market at that period of time. We processed around $2 billion worth of loan orders through our trading system in a couple years. We had most of the large institutional capital providers on our platform. We had the best lenders on our platform. We built really great analytical software that a lot of the
Mhm.
originators in the space were using. It just didn't develop into the like multi-trillion dollar real-time trading of consumer loans market that some people in the world thought it would become.
And so at that point, you exited to Cabbage. Cabbage is, if I recall correctly, more of an SMB lender. Is that correct? It's like they,
Yeah.
yeah.
So Cabbage is or was one of the largest small business lenders in the country, non-bank small business lenders.
Mhm.
They sold to American Express in late 2020
Full
after about
circle. Full
yeah,
circle.
yeah. So it's funny, and I left before they sold to American Express, and I knew, of course, people on both sides of the deal once it happened, and that
Right.
was very interesting talking to them about their expectations for what they could do together. I joined two different organizations' town halls at American Express after the acquisition and spoke to people there about it, which was pretty interesting. But Cabbage was also a great place to work. Cabbage had been a client of ours at
Okay.
Orchard, and they were using our technology particularly to manage some of their analytics and a few of their capital markets workflows. They were using our analytics engine. What dollar of capital should they use to fund which loan in order to optimize their advance rate, their interest rate, their dollars out the door, whatever. And it was a pretty interesting technology. And we knew the founders. We knew Rob and Catherine.
Mhm.
We knew the team. We liked them a lot. We thought it was a good organization. So they were a good partner to sell to when it came time. And then we integrated the team and the technology and the data into Cabbage. And those 2 years at Cabbage were pretty interesting because we were growing the lending business very aggressively.
Yeah.
and at the same time, using a lot of the data and capabilities and customer relationships of Cabbage to build a few new products. So
Hmm.
not just the lending products, but we built an analytical insights product for small business owners. We built a card, we built a bank account, we built a payments product. And a lot of those you could see now being offered by Amex as part of what they call Business Blueprint.
Interesting. So yeah, it feels like the data was the beginning, but then you were able to expand the product offering at Cabbage. But ultimately, you ended up back in lending. It sounds like at Ocrolus. I mean, before your description of Ocrolus just now, I just assumed, or like as an outsider, I thought of Ocrolus as really a data extraction from documents, but maybe
Mhm.
a little bit beyond documents, but data extraction, OCR type of company. But it sounds like there really has been a focus on the lending space based on your description. Yeah. And so can you tell me a little bit more about how, was that always the case? Or was that like more of a recent thing where the positioning is more focused on lending? Like how
It's a
did that
great, yeah,
happen?
it's a great question. And in fact, a very common question. And we probably don't do ourselves any favors by having OCR in the name,
Right.
but now it's the name. So the mission of Ocrolus is really to help financial services companies make high quality decisions with trusted data
Uh-huh.
and unparalleled efficiency. And automating documents can be a way that we do that, but it's not the mission. It's a
Hmm.
technique. And so there's actually many other ways that we do it. And certainly in the earlier stages of the company, the focus was very much on documents. And look, it's true. We process millions of pages of documents a week.
Yeah.
We do a massive, massive amount of document processing, but the focus is on our real value as a data and analytics platform for
Mhm.
lenders to make better decisions and to run their business more effectively. So if you think about, I'll give a mortgage use case and a small business use case.
Yeah.
In mortgage lending, let's say someone's applying for a mortgage, typically is a very document intensive process. And you might have 50 different document types in a 200-page mortgage application.
Mhm.
We will, with our combination of AI and other automation techniques, classify the documents, extract all the data, but we put it in a very nice workflow. And it's a really sort of bespoke vertical AI workflow for a mortgage underwriter so that they
Mhm.
could go through all the steps of a mortgage application. One of the great values of it is being able to say, you know what, let's say for this particular type of mortgage and this type of mortgage in this state for this home type that's going to be financed in this way has two co-borrowers, and one borrower has a traditional job, the other borrower has a freelance job and rental income and investment income. Therefore, the guidelines say you need to calculate income in this very particular way. What
Mhm.
our system does is it automates, all right, you need 10 documents. We're going to take these 20 fields off these 10 documents, calculate this in a certain way. We automate it, but then we put it in front of the underwriter to give them a chance to make sure that it's right, make sure that it's appropriate before exporting that calculation and finishing underwriting the loan. So it really helps underwriters be AI enabled underwriters
Mhm.
so they can be more productive, be more efficient, make fewer errors, and deliver a better borrower experience. So we've seen a lot of growth in the mortgage space. And then in small business, which has been our largest vertical in the company really forever, and it continues to be, and we continue to see a lot of growth there.
Yeah.
We have about 200 business lenders using the platform today, and they will get data from their applicants in a number of ways. Sometimes they'll get bank statements, but sometimes they'll do a Plaid connection or use another aggregator. Either way, they pass the data through Ocrolus.
Mhm.
And we're not just reading the data off the document, we're normalizing the digital plus document data. And we're really constructing a very detailed cash flow profile of the business so that a small business lender can understand their applicant's financial health on a really
Mhm.
deep level. So they can understand their revenue, their expenses, their debt capacity, their propensity to overdraw their account. And that is leading a lender to make a really good risk decision and a really good fraud decision and a really good pricing decision. So it ends up becoming much more about analytics and workflow and decisioning than just about the document extraction itself.
Okay. That's really helpful because I think so in a lot of ways you can't get away from the document, and you need to bring structure to that unstructured document in
Yeah.
order to put it into this decisioning engine. And that's what Ocrolus does. It's really the unstructured data, the document management, the document processing is really the like table stakes to even be able to make any good decision in this case for these.
It is. And,
Yeah.
it's actually still harder than people think because,
Tell me about it. I mean, yeah,
because you're generating the documents.
yeah,
Actually, if everyone used you to generate their documents,
yeah,
then processing the documents on the other side, extracting the data would be a whole lot easier. But as everyone uses you yet, maybe they will someday, but that makes our job hard and possible because we just have to extract data with a really high degree of accuracy from such a diverse number of documents. And we support around 1,600 different document types today, given the diversity of financial products that we support. Even bank statements. We process data from about 7,600 different banks
hmm,
over the last year.
wow,
And it's just because of the way the United States banking system is, it's very fragmented. There's so many banks, so many credit unions, so many FinTech banks, essentially banks, but it makes our job very interesting because getting the data with 99.9% accuracy still, it really takes a lot of work and it takes a lot of quality control, takes a lot of fine tuning. And but that's important. That's important to do when you're making a lending decision.
yeah. No, I think I always thought about how. Well, one thing you mentioned that was really interesting to me was like normalizing the data, right? Like
Hmm.
normalizing the data into your system so that it can be used. In a lot of ways, that's how we think about it as well. Like the document for you guys as well as for us is really we view it as a mechanism, a transport layer for moving data from one place to another place.
Hmm.
Now, if we were to work together, I feel like then our data could just flow directly into your systems. The documents could still be generated for compliance reasons, but
Hmm.
instead of trying to read it off of a document, you could just ingest it directly from our system. And if there was a good normalized way of sharing that data where we agree this is the schema, I think that could really push all industries forward. I mean, special lending, it sounds like. I
Yeah.
mean, you mentioned mortgage at the beginning. That was actually the reason I started Anvil back in the day was I was hunting around for a mortgage
Hmm.
and every single bank was trying to collect the same information from me, but on a different PDF. So I had to
Oh
fill
yeah.
out effectively the same PDF, but with the same data fields, but structured completely differently, like 6 times in order to get a good rate. And I was like, there really needs to be like a TurboTax slash Common App version of doing this that's online. And that's kind of how we ended up where we are today with solving the kind of data ingestion in terms of like, sorry, data collection aspect of it from a human instead of the data ingestion from a document side of it. Yeah.
Yeah, that makes a lot of sense. Shopping for a mortgage does make you want to start a fintech company or build some kind of product because the system is just so inefficient in so many ways.
It is. It's so I feel like you try to make these financial products one size fit all, but at the end of the
Hmm.
day, there's always like your example that you just gave, which is somebody who has irregular kind of income or more unique income situations. As a founder, like I've experienced that myself, where most banks won't underwrite me
Hmm.
because I'm a founder of a company that isn't making money and
Hmm.
they take the whole balance sheet of the company and it's like wait, that doesn't quite make sense. But anyways, trying to move a little bit into the meat of today's discussion. I think, as the title of this podcast suggests, it's a build versus buy podcast. So, really want to kind of dive in on a situation or a scenario that you've experienced where you've had to make that build versus buy decision. You could have been
Hmm.
on the maybe you were the buyer or slash builder, or maybe you were selling to somebody who was making that decision. But would love to maybe set the stage a little bit for that decision to start.
Yeah, and so I was thinking about a good example to use because I've been on both sides of this just so many times
Right.
and go through this conversation, of course, on a very frequent basis with our own clients and our prospects and everything. So I want to step in the time machine, as it were, and go back. I'd like to go back more than 10 years ago, maybe 12 years ago, because it doing so will provide some contrast to how you might make that decision differently today. So
Mm,
To set the stage, as I mentioned before, way back in the day before my time in what you would call fintech,
Mm.
now I worked at Citi, and I worked at Citi for 2 or 3 years in small business lending and ran the analytics part of that, which was really based on our goal was to figure out basically the risk policy and operational execution for who do you market to, who do you underwrite, how much money do you give them, at what rates, how do you manage the portfolio, when do you put people into early warning collections, all that kind of stuff. Then all the risk decisions that had to do with that. There was a very particular workflow in business and commercial banking where for exposures, client exposures above a certain size, you had to screen those businesses every once in a while,
Hmm.
update your financials on that business, update your metrics on them, and sometimes trigger some banker to go do a site visit of the business to make sure they were real and still in business and to record their impressions and everything like that. And
Was this a city specific process, or is it like kind of industry wide where everybody does it this way?
this was city specific, but it's a pretty widely used concept in commercial lending.
Okay.
And the general rule is the larger the exposure, the larger relationship, the more manual the process would be and the more human intensive it would be. And back then, and again, this is probably in 2012 or something like that, we there was no great tool to do this. Someone probably had set up like a SharePoint database for this, a literal SharePoint database, which is not as common or not something you would want to use today.
Yeah.
And somehow it fell on me to figure out how we were going to build a better tool for this.
Hmm.
And I think it's the kind of thing that if you were doing this today, you would probably build it internally. I mean, unless someone gave you a really beautiful off the shelf experience, unless there was a company and you could probably build a fintech company around this, or someone could, and say, like, business screening for commercial lending, is there something great that's off the shelf that'll manage this workflow?
Mm.
Today, you would probably do that, or you build it internally. Back then, neither was easy. And the reason that neither one was easy is the vendors didn't exist. There's no good vendor who could sell you a really, really nice fintech modern kind of workflow for this. And if you just wanted to build, the friction to building within
Hmm.
a large bank was so high. And look, back then, as I said, I was a risk leader and a risk and analytics leader. But since I've always been a programmer, I had all sorts of little tools that I made
Hmm.
myself when I worked there. They were secret, but I figured out how to get access to different
Yeah.
systems, get access to different capabilities. I got the Chromium rendering engine to somehow work in IE6, which is what people had on their desktops, like really crazy stuff. So there's a lot of stuff I made myself, but this was something I couldn't have made myself back then. And so what did we have to do? We hired a consulting company to do it.
Hmm.
And our main criteria in selecting this firm to build this tool, I think, is really interesting when you look at it historically, because it wasn't about how technically sophisticated they were. It was only because they were an approved vendor. It was just because the vendor approval
Yeah.
process was so onerous that it would have taken us a year to get someone else through vendor diligence. And so even though this firm was really not well suited to build this thing, it was kind of the only option we had. And I had a specific scope, I had a limited budget, and I had to call these people up and say, hey, look, you're the only vendor we can work with because you're approved.
Yeah.
So can you do it for this price?
Talk about lock in,
And
right? It's like once you're
yeah,
in, right?
absolutely. And so, and in that case, when the technical choices they made in building this were not the choices that you would make even in that era's state of the art. Even the choices they made right then were probably 5 to 10 years older
Hmm.
than the state of the art. But again, the ecosystem for building was just so different back then that we were really locked in. We had no other way of doing it because there was not a great ecosystem of fintech software that people could build, and the ability for people working at a financial institution to be hands-on and build their own software for something it just didn't exist. I think today, which I could talk about, you would do things very differently.
I mean, kind of going back to that question around vendors, right? Like you were talking about fintech vendors that could give you a beautiful workflow for this process.
Hmm.
I imagine an organization like Citi being so large would have so many exceptions to that beautiful workflow process that a vendor could provide that it would almost be like custom development on top of an existing solution in some sense, right? Like I guess like
Yeah.
I can't imagine an organization like Citi wholesale adopting a fintech solution without having at least 50 changes that they want to do it, right?
Yeah, you make a really good point, and I think everyone sort of feels that, and I know we felt that. Listen, I felt this at other companies too. When normally when you're a fintech company like Ocrolus and probably like Anvil too, you start out by selling to companies that were smaller because you have a smaller sales cycle. It's easier to do. You get more frequent product feedback, and that's what you want. And then eventually you go up market, and when you go up market, the challenge is not just the sales cycle, but it's also the customization. And how do you win those deals and build what you need to build to win those deals without becoming a custom software development company? Because you're
Right.
not charging like you're a custom software development company. You just don't have the same structure, and that's not really what you want to be. It is a very delicate balancing act. What I've found in this is a couple things. Number one, you can't totally get away from some customization. When you're selling to a large enough client, and this can be worth it if the deal size is large enough and the strategic value for your company is large enough, it can be worth it to do some customization. Ideally, you can treat that client as a design partner, so whatever they're asking you to customize can be valuable for future clients. But I think often the clients or prospects who are asking you to customize are not necessarily asking for it because their customization is the best possible solution. It's just because that's what their requirement is today. But it
Yeah.
doesn't mean that you can't work with them to change their requirements. And I think when you're even with a very big company as your prospect or client, when you're a vendor and you work with hundreds of clients, you can actually educate the
Mhm.
company that you're selling to and say, yes, I know you do it like this way today. I appreciate that's working for you. Great. Let me just tell you what we see in the market. Let me tell you how other people are doing this, what they've learned, what's working, what's not working. Would you be willing to try it this way?
Yeah.
And that's a way that, hopefully, in a very helpful way to the client, you can essentially negotiate down the scope of customization.
I think a lot of the risk as well when working with larger clients from our own personal experience is that a lot of times the customization isn't necessary. Your customer's customization request isn't in the context of what you're trying to build as a product. And
Hmm.
so you run the risk of saying, hey, I'm just going to build this customization that maybe helps you overcome the internal hurdles so it can win the deal. But it ends up becoming this like orphan code that lives in your system that like
Yeah.
nobody is maintaining, or like if you were to go maintain it, you have to have so much context around how that customer works in order to like make the correct decisions, which is a challenge for a small company, especially a small company which is trying to maybe close that first big deal. But kind of like going back to your time at Citi, so you guys ended up hiring this vendor. So kind of like you are buying the build in a lot of ways, right? You're buying the
Right.
build from a vendor. And well, when working with this vendor, how did you decide how and what to build? I mean, it sounds like they might not have had the most experience building something in the space. You probably had to have a pretty, heavy hand in that experience, in that like decision making process.
Yeah.
But yeah, how did talk me through that process? Like, how did you work with this vendor?
I think essentially, again, back then, and you would do it very differently today, it was a very traditional process of we had the requirements, we had the operation, and they were just very directly building to our requirements.
Mm,
And maybe whether they were good or not, I would have appreciated feedback from a vendor that had done this with other banks in the market. And so again, I think you would do it all differently today. If you were a bank or other large financial institution making such a decision today, I think you would build versus buy depending on one, your internal organization's ability to build, because
Mhm.
everyone has a capacity to build, which is a function of talent, but also just bandwidth and what else you have on your plate. But it's also about, do you have proprietary data and process
Mhm.
that benefits from you building it yourself? Does building it yourself give you compounding value? That's not just like you build it and it's done, but the fact that you're building it will actually cause you to learn. And does it benefit your infrastructure in other to build these tools internally, because there is actually something different and proprietary and cohesive about it.
Mhm.
Beyond that, I do think we now live in a world where there's a lot of solutions that people can buy. And with Ocrolus, we think about this a ton for our own business when we're building or buying something, but also for our prospects and clients in building their own workflows. And
Mhm.
so the platform that we've built is a really flexible platform. And so there are clients who just use Ocrolus for a huge part of their workflow, and they run all their data through us. They use our analytics, they use our dashboard, they use our API, they use our webhooks, they use our integrations, they do all those kind of things. There are others who have a ton of capacity to build on their own. Plus, they have a lot of really proprietary workflows that they want to control. And they might just use our raw data and
Mhm.
metrics. And what they really care about is our turnaround time and our accuracy to get them raw data. And then they build something on top of that.
Is there any customer at Ocrolus that has, or I guess like, let me reframe the question a little bit. Does Ocrolus have an out of the box, like one-click solution for customers who maybe don't want to be customizing against the APIs or registering for webhooks? They're
Mhm.
just like, hey, I'm a small bank in nowhere, America, and I just need a system to do some level of underwriting.
Yeah. So 100%. And I almost don't think enough people know this, but if
Mhm.
you are a, a small bank, a lender, anywhere, and let's say you want to process a business loan application, you can sign up in one day, pull up our dashboard, literally just drag all the applications and documents from your desktop into their dashboard for each application. And we will typically in seconds give you all the data from all the documents, all the analytics, the financial profile of the business who's applying, and let you work directly in that system with
Mm.
zero API integration needed.
So it feels like you, as Ocrolus, are really serving that whole spectrum. You have on the far end, you have the builders who are really using you as a data pipeline.
Mhm.
On the bottom end, or like the entry level end, there is the self-serve, drop all your documents in here. And then probably most people fit in that middle category where they're trying to leverage as much as possible the existing infrastructure, but not, they still have their own custom workflows that they need to build on top of that. Not always.
Yeah, and a very interesting thing, by the way, is it's not necessarily consistent from organization to organization. So we do
Hmm.
have one example. We have a very large financial institution that is using us out of the box
Hmm.
for document and digital bank data collection. So you would assume an organization of that size might want to build the experience themselves, but they said our experience was good, it was smooth for the customer, it's out of the box, it integrates with all their analytics. And so
Hmm.
they said, okay, for anyone applying for business credit, they are going to display to them a widget that is developed by Ocrolus. It's white labeled with them, but it's developed by Ocrolus, and they can allow the borrower to choose: do you want to authenticate through Plaid, or do you want to upload bank statements? Either way, that's the way they apply. That's the way they provide their cash flow data. It all runs through Ocrolus, and that we have that product being used by tiny lenders, but also by a couple of the largest financial institutions out there.
Awesome. I mean, so I feel like we've kind of strayed away from the initial conversation around Citi, but it does kind of paint a picture of how the perceptions or like the decision making process around build versus buy has really shifted. I mean, presumably Citi today hopefully is more open to working with fintechs and maybe
Mhm.
adopting some newer processes, but I'm sure they still have kind of like internal vendors that they use to build out a lot of the process on top of whatever solution that the fintech is providing. And in some ways, it feels like the decision today is more of another layer of abstraction where you're doing the build in a lot of ways, right? It's if the in the past the build was like you got to build from the ground level, you got to start from just like an empty code repo. Nowadays, it's probably like, okay, we have the data pipeline, we just have to build this like top layer. We white label it, we
Yeah.
register for the webhook. So you're abstracting away that lower level to provide more
Yeah.
value.
The good thing is so many organizations at least have invested more in their data infrastructure over the
Mhm.
past decade. Not that anyone is perfect. And as a data person myself, I'm never happy with any data architecture because it could just always be better.
Right.
But companies like the state of data architecture that companies have today versus a decade ago is very different and
Mhm.
usually much better.
Awesome. I think, the one question we do always ask here is, in retrospect, would you have done the same thing? And it feels like you did what you could based on the constraints you had at Citi. So
Yeah,
I
but
guess the answer is yes, but if it was today in the same position, you would do it differently.
right. If it was today, no way.
Yeah,
There would be so many more options today.
right. Awesome. Well, let's to wrap up, we always do love asking our guests some fun questions. So to start really quickly, just like what has been something exciting that you've been working on, whether personally or professionally, that you're excited to share with listeners of this podcast?
Yeah, so in the business at Ocrolus, we had a great 2024 and we grew our volume that we processed in the year more
Hmm.
than 100% over the year before. So we've had really great growth, which is just a testament to both the team and the clients we serve. In our development, our product development at Ocrolus, we've really been expanding, as I think I alluded to, up and down the funnel. So we've been introducing products and features and value that work both earlier in the customer life cycle and later in the customer life cycle, which I think is interesting. Part of it is opportunistic and part of it is just being pulled there by our clients.
Hmm.
And particularly in business lending, there's just still so much product white space, still too hard for small businesses to access capital. And it's too complex for lenders to evaluate them. And so
Hmm.
there's a lot of stuff that we can build, and that stuff is very exciting. On the personal front, as I shared before, I've always been a tinkerer. And so I've been experimenting a bunch myself with voice agents. There's a lot of really interesting voice agent capabilities that exist today, and the ability to string things together using LLMs, voice agents, and the telephony infrastructure.
Hmm.
You can do some cool stuff. And I've been also for these personal projects coding a lot in Cursor with Claude Sonnet behind it.
Yeah.
And my 8-year-old son really loves doing math, and so we've been building some math apps together. And using a lot of the AI coding tools just expands the creative potential of what you can build and lets you iterate quickly. So that's been a lot of fun to play with.
You mentioned Cursor. I recently just got into Cursor after initially when we started the company, I did a lot of building. I've stepped away from it and now I'm like, oh, I should get back in the code base. And I was trying out Cursor and I was just blown away by the ability to ask your code questions essentially, right? Like
Yeah.
things that I would have had to gone to a developer, or I guess like when I was a software developer, my senior mentor, like, hey, how does this work? I can just ask Cursor and it tells me, and then it points me to all the places it's called. It's quite amazing, I will say. Yeah,
Yeah.
it's a lot of fun.
It's pretty powerful. What I feel is cool about it is if you're coding either with libraries or services or even languages that you don't code in that frequently,
Hmm.
you know what you ought to do, but you don't really know the specific syntax. And
Right.
that just gives you such an assist in being able to build it faster, to prototype and test and all that kind of stuff.
Right. But you still need the good architecture, the learning experience of what a good architecture is like
Oh,
in
yeah.
order to implement it well. I feel like that. I think that's the thing that I'm seeing now is a lot of people are like, oh yeah, I could build anything with Cursor. I just tell it to build it. And then when you go do the code review, you're like, well, I wouldn't have designed it this way, but I guess the AI wrote it.
Yeah, that's right. If you don't have the architecture experience, you can get off the rails pretty quickly.
Yeah, absolutely. Cool. And then last question for you is share one product that you've purchased recently that you either loved or would never buy again. I will say we have yet to have somebody say something that they would never buy again. This is a nationally syndicated podcast, so totally understand. But would love to hear your take on that. Is there something that you've loved or would never buy again?
The love that I was going to say Cursor Pro, which is a really awesome product, but we already talked about it. So I'm going to say something else, which is custom painted Nike shoes. We actually did an executive advisory board meeting with a couple clients and partners of ours recently, and we did an event where we painted some Nike shoes. We custom painted the shoes, and I wore them like out of the house for the first time yesterday. And that was cool. It was a lot of fun and fun to wear something that, and I'm not good at design. I'm not remotely good at design, but fun to wear something that I painted myself.
Interesting. So it's like coloring in like a color book, but it's a shoe essentially. Is that what you're saying?
Yeah.
Oh, that's cool. It's not like you just went and clicked some things online and then it shipped to you pre-painted or
No, real life with paint and markers and stickers and all sorts of stuff like that.
That's awesome. That sounds like a lot of fun. Might have to look into that for our own team here. Don't get any ideas, Anvil team, but I'll look into it. Awesome. Well, David, it's been a pleasure speaking to you. Thank you so much for doing this interview and talking about your experience at Citi and Ocrolus and Cabbage and your own company as well, Orchard Platforms. But really enjoyed the conversation. And yeah, thanks for being on the show.
Same here. Thanks for having me.
Awesome.
Thank you for listening. If you found this show valuable, you can subscribe to the show on Apple Podcasts, Spotify, or here on YouTube. We'd love if you could leave us a rating and/or a review, as that helps others find this podcast. See you next time.